All right, let me show you how I trade momentum tickers and how I use them like in all of the other strategies that I use. A lot of people start out like trying to get super rich on penny stocks and shit like that. This is not how you're going to do it. So if you think that you're going to be able to just take a full size on this thing and make like 10 to 1 or whatever, you're going to get annihilated. So there's a better way to do these, and you can treat them like base hits with a couple of key criteria. I'm going to use this one because I think this one was quite a good one here. This is Lucy. But in general, most of your crazy momentum tickers are going to be like downward bearish with like a crazy spike. And the reason for that is that these are piece of shit penny stocks. They're like institutionally shorted. They're full of traps. They're all scams. Like, don't sit in these for too long. Like, you probably don't want to hold these overnight. Okay. But here's how you do it. So first, the type of D1 you're looking for is one that is not too crazy low and the spike is considerably high, like it's getting through levels instead of just popping up and back down. A lot of these can just be short covers on the way down. So for example, like you get excited about this spike through here, which was at one point in time a green candle up through there. That's really, really foolish because there's so much bearish action down through there. There's bag holders all the way down through there as well. So you want to make sure that whatever you're trading has like blasted through some shit and it's hanging out up there a little bit, okay? The second thing that you're looking for on this is you want to make sure that wherever you're trading, there's no crazy high relative volume D1 candles as well. So for example, we look at Lucy. This thing traded 940 million shares 2 weeks ago on Friday. So that's a lot of volume. And if you look at that through there, that's even still a lot of volume. That's like a rest day, and that's still 90 million shares. I know they're only at like 50 cents or some shit, but that's a lot of volume. There's actually no real volume anywhere else on this chart that has traded to that degree, which means there aren't really enough bag holders in any one given spot to stop this thing and completely flush the shit out of it, right? So that's another thing you're looking for. If you're looking at some other stocks, we'll look at maybe like Woof is a good stock as well. You can see that there's more considerable elevated volume through here, but then we have like this area right through here. That's a big volume day. That's like 24 million. Then you get this compression sideways. We're continuing to go up. We got this one that's 26 million. And then we scroll out and then you're looking for all these other points on the way up. So what I would do is I would look for any candles that are like above kind of the general volume that it's going to be trading at. And I would kind of mark the highs and lows of those candles because those are potential areas where there's bag holders or enough of them to reverse the price. In the case of Woof, if I mark the shit out of this thing, there were a couple of lines and levels through here on the way up. And one of the big key lines was right through here. There's like a lot of bag holders at a previous, there's a lot of volume that traded at a previous level up through there. I think it's like, is it that candle? No, I think it's maybe that one. Something like that. Somewhere around in there. There's some high volume going on in through there. That's why that was a good area to take profits. You can trade between these levels. So you can trade a confirmation of like an intraday bounce through here up to the next level. But these levels are all just like really high volume highs and lows of D1 candles, and they work pretty good. In fact, if you put up an Ichimoku cloud, I would bet you that a lot of these lines would show up on an Ichimoku cloud as well, or like volume at price or whatever liquidity people use, etc. So that's the second thing, is you want to make sure you know where all these really high volume areas are, or where a lot of shares are owned in the price, so that you don't run into a complete flush face rip. You're actually going to trade in between these levels. You confirm above one, trade to the next one, and then you're out. Okay, so that's the next thing. Here's the next thing you need. There's only two ways you can trade these, with options or with shares, obviously, right? If you're going to trade with options, you need to make sure the price of the option is pretty close to parity, because these things are going to move like crazy. You don't want a ton of implied volatility priced into this thing. You want to make sure that you're getting really good just risk reward. In the case of Woof, it was really nice. The options were almost at parity for the $3 ones, and the 350s weren't too bad either, especially a month out. So you know that when you're trading like from level to level, you can get like 40, 50% on these damn things, which means you can trade for all or nothing. You can trade for a 100% loss, or the trade works. And that's the key on these things. Do not size these things for like, oh, you know, I'll just get out at this level or that level. You might halt down, you might get flushed, you might be holding it overnight, and then the next morning you gap down because they offered shares. Who knows? Maybe the CEO got caught smoking crack. We don't know, right? So make sure when you're trading these things that your options are favorable so you can get something out of them. You want to probably get like 40, 50% out of your option, something like that. maybe even more. So your options should be like kind of parity, and there should be a good enough room for this thing to move. If you're trading shares, you can still trade shares. This is the key. You want to make sure that the, you can see this one. You want to make sure that the ATR intraday on this is so nuts that your shares act like options. On CTNT, that was exactly the case. Dave and I traded this thing on the way up a little bit, and then overnight through there, I managed to get a little bit of win there too. But if you look at that ATR and some of these freaking candles, this is just a 5-minute candle, and the ATR on this candle is like 5%, which is insane. This is why this is good. You don't need to use a lot of shares to make a lot of money on this thing. So on CTNT, let me see, let me turn up these lines again. Let's say on CTNT, you are trading these levels. Let's say you're trading from this level to this level right through here. You think, oh, it's not a long level. But if you actually take a look at the percentage you can move through there between these two levels, remember, these are just high volume areas on the chart. That's 32% on freaking shares. So you could size this thing for 100% loss. And if you're good with your price action and you're good with reading charts and technical analysis, as soon as you confirm over this level, you enter that thing party time right there. Your shares are like freaking options. So that's another thing too. You need to make sure the ATR is insane. And if I look at my scanner through here, what's my fundamental criteria through here? I'm looking for an ATR where each 5-minute candle is at least, I think at least a 2% move on the underlying. That's what I'm scanning for, something like that. So at least that, ideally more, okay? So that's the next thing you want to look for. Lastly, try not to hold these overnight because if you do hold it overnight, you might go to zero. Now, if you're in a really high ATR ticker and you're still like confirmed in the area or you're still good on the D1, you can choose to hold it if you want. You just need to be prepared for this thing to go to zero, okay? And if you're choosing high ATR tickers, if you're choosing the right type of D1, you see how this one's not like a steady creep down and then just a pop? It's actually at an all-time high. If you are choosing these types of tickers, your chances of going up or chances of winning are very high. But remember, you still, on these momentum tickers, need to use a ton of price action reading. You need to be really slick with your ATR, or not your ATR, really slick with your price action, really slick with your technical analysis, reading the levels. You need to know where these key levels are, where bag holders would be. And if you can do that, you can actually get some nice wins out of these things. But do not do like lots where it's like, oh, you know, I just get like $5,000 worth of shares or whatever. No. Price these things to zero. So let's say I wanted to risk $100. If I'm buying at $10, I'm taking 10 shares. And then I make, how much? $4.78 move? Cool, $47 winner, base hit, something like that. That's how you trade momentum tickers. Do not chase anything that doesn't have that criteria. A pop above what would be a short squeeze, big ATR, and options or options that work well for parity. And then you need to know where these levels are, the anchored VWAPs from the big high volume areas, the IPOs, etc., and the D1 candles as well.